And then you have basically, you have to grow inorganically through different maneuverings. Like you can, go and raise Bitcoins from OGs, or you can get a direct offering and negotiate with some investor to come and do essentially like a second pipe.
Just wanted to get your take on, we're in Q4. This is seasonally the best time for Bitcoin's performance, especially in the halving year +1.
So let's see. I think cycles aren't over until we see one not happen. So, we did not touch the 2013 all-time high in 2014. The whole year was lower. Not to mention the entire of 2015 and 16 was lower as well. So they didn't hit that until January of 17. And, similarly, there was no point in 2018 where the price crossed the all-time high of 2017. Also, by the way, didn't hit it in 2019 and didn't cross it until mid-December of 2020 was the next time that we crossed the all-time high of December 2017. So it was 3 full years later. And then, same thing, 2022, the price never got close to the all-time high of 2021, which was like 69K. And, we got the kind of ETF pump at the beginning of 2024 where we touched, I think, 73. So it took that long. What was that? Over 2 years and 3 months, something like that, to recover the all-time high from November of 21. So, I think there's more than a 50% chance that the all-time high is in this calendar year. That's kind of, what I'm betting on. I'm banking on that dynamic continuing to some degree. I think it would be super cool if there was a new all-time high in 2026. And I think that would be another notch in the belt for those of us that want to kill cycles. I do want to kill cycles. They diminish over time, but they're not dead yet. And then the other thing we'll want to watch is, how large in magnitude is the percentage drawdown from peak to trough. So whatever the new all-time high is, historically the last 4 drawdowns have been, I think, 94, 87, 85, and 77. And so, scarily, we would be on track if we have anything less than a 77% drawdown from peak to trough.
What do you think will happen to those companies that are trading below NAV and can no longer raise money to buy Bitcoin?
Okay, so on to treasury companies. So look, at the 30,000 foot level, what you have is MicroStrategy was able to raise from people kind of just believing in the theme. And this is from like 2020 when they launched their Bitcoin strategy through 2023 before the launch of the ETFs in the US. And that's when they had that phase of, accretive dilution. And it had a hangover all the way through to late 2024 when they were still able to hit the ATM and essentially, issue equity at a premium to their Bitcoin holdings and then use the proceeds to buy Bitcoin. But, logically and from first principles, without people kind of just believing in ever expanding MNAV multiple, by definition, the only thing you can really count on in a market with open alternatives is leverage, basically tranching Bitcoin returns into a lower risk reward instrument and a higher risk reward instrument. And that's essentially what they've done now. So I and others forecast this in Q4 last year, and then they started issuing these 4 classes of preferred stock, which are all exactly that. It's lower risk, lower reward returns that lever up the equity returns and make the equity high beta to Bitcoin. And that structurally is also why I called these companies leveraged Bitcoin equities. So that is accurate. Whether you like the acronym or not, BTC is a bad acronym for these things because it's already taken by Bitcoin. And I don't really like ceding the territory to the SHATs, the shitcoin asset treasury companies that try to call these Bitcoin DATs. I don't know why they always come around and ruin good things.
Do you think we're going to see a lot more consolidation in this industry, or do you think more Bitcoin treasury companies will come to market? A couple of months ago, you would hear people in the industry say, hey, there will be thousands of these things. And if that's the case, my question is, why are more of these actually needed at this point?
Yeah, so I think there will be dozens of them launched each year in 10 years. So my thesis has always been that this basically looks like the private equity market, which is very similar to why MicroStrategy got into this, right? Because they had the two main things that make you a target for a go private transaction for a publicly listed company in the US, which is you're cash flowing and you have a low multiple, which is telling you that the market doesn't trust you to reinvest your profits in the business. They think they have better uses for the money, which is why they want you to do stock buybacks or pay a dividend, and instead of reinvest in the business. And so usually that's the 30 to 40 companies from NASDAQ and NYSE that get taken private from private equity each year. And so that's the pool that I think will choose to be on a let's increase Bitcoin per share over time instead, and choose to do that. So that's the market that I think has the long-term play here. In the short term, we are very far away from retail investors, which are fueling this, and from Wall Street analysts, so the research departments at the banks. We're far away from them being able to analyze and fairly value companies that have a Bitcoin treasury strategy and an unrelated operating business. There is no research department on Wall Street that can give good research for a food media company and a Bitcoin treasury company, an e-bike company and a Bitcoin treasury company, a medical device company and a Bitcoin treasury strategy, an IoT company and a Bitcoin treasury strategy. It's not going to happen. And so you basically have, I think, just, Bitcoin related financial services. MicroStrategy gets a pass because they're so big, and essentially their business is creating, issuing, and marketing Bitcoin-related securities. That is their job. I think that is going to be the job of all these companies that succeed and hit scale and keep going. In as much as there will be operating businesses, MicroStrategy has BI, which again doesn't matter because nobody looks at it anymore, and they basically get no credit for that. If you have a shot at getting value for your operating business in addition to your Bitcoin treasury strategy and your Bitcoin pile times and MNAV, I think that's only going to be if Wall Street analysts and retail are capable of giving you some credit for that, which means it better be damn close to the same theme. And so I think it'll be like Bitcoin asset management, Bitcoin financial services, things like that.
Why? It seems like it's the conversation about Bitcoin, and I totally hear you. I understand. You're calling out these other cryptos, Ethereum, and these other strategies that are being run in terms of these treasury companies. Why is that the case? Why is it that perhaps they can't coexist, or there's Bitcoin and then there's this other stuff? Why? It seems like
they already do exist, so they are coexisting by definition.
Why is it necessary to sort of maybe bring down some of the others? Why is that?
Well, no, it's a competition for capital and for mind share, and also just trying to educate the investing public and Wall Street on what's real and what's not. So you're in that respect, that's around treasury companies. Basically, the summer and fall has been a lot like 2017 to 2023, where we fought it out with shitcoins for in crypto casinos, right? That was like Swan and River and Strike and Unchained versus Coinbase for 6 years, and Fold, right? So in the treasury space, it's kind of similar, and they ran out kind of all the same narratives, and Lubin is out there, he doesn't actually believe the things that he's saying anymore because they've been proven wrong already, but he's trotting out, basically the same speeches and the same media appearances that he did in 2017, 18, 19. And they kind of stopped, right? You haven't really seen anybody claim that Ethereum is a store of value for years until this summer, because he needed to repump and try to reinflate the narrative briefly, or they were going to completely lose their kind of like semi-peg range to Bitcoin, and it was just going to fall off a fucking cliff behind these Bitcoin treasury companies. So it wasn't even necessarily that the shitcoiners, mostly New York based, needed to do it for themselves or even saw it as that much of an opportunity. They just needed Bitcoin not to run away with it.
What's the strategy there? As we talked about earlier, from my viewpoint, it's I think it's going to be pretty hard for these Bitcoin treasury companies and these treasury companies in general to differentiate themselves. You think that's going to be a more viable thing? Can you talk about the strategy at that company?
Yeah. So look, I think this is a group of companies that basically launched over the summer, and there were 6 of them that have like mid-sized Bitcoin stacks, and got off the starting line when there were probably another 100 that failed. So there were a lot of deals that tried to get done and couldn't get done. So just being in the mix is a win, first of all. Second of all, the market is coming toward you as prefs and different, Bitcoin underlying debt instruments get created and popularized. It opens up the opportunity space for all of these companies with piles of Bitcoin in the, mid-single digit thousands. And then the Bitcoin price goes up, and that increases your NAV and gets you even closer to being able to sort of unlock innovation and be able to start offering and tranching your Bitcoin returns, which is what you want to do. You want to use that leverage from a credit offering to juice your Bitcoin returns and add beta, make a higher beta for your equity. And that attracts capital and opens up your options chain and increases, liquidity in your options chain. And then converts open up again, right? Converts were used very successfully by MicroStrategy for a long time. And I think they will continue to be used by lots of these Bitcoin treasury companies, even if MicroStrategy stopped using them. Again, there's a massive market for that. The institutional investors like the duration matching of knowing they're going to get the principal back, which you don't get with the strategy prefs unless you sell it. So yeah, I think there's so many different options here. There's so much creativity left to be explored. There's so many different models that companies are working on. There should be an announcement this week by one of the companies in the space where I think they've recruited a few thousand more coins from like OG hodlers and figure out a structure to convert that into shares without incurring cap gains tax, which I think is probably what BSTR did. That's my guess. With that 25,000 coins is probably like OG coins that got checked in but passed the cap gains onto the stock somehow. And that's basically how the European companies are all kind of growing with those converts. They're not making people sell their Bitcoin. They're checking the Bitcoin in, not incurring cap gains tax, and then they have like a 5-year convert with a 30% out of the money strike or something.
One thing I have noticed is that the Bitcoin purchases have slowed down over time. I think in July, you guys were purchasing, or Sequence was purchasing weekly. In August, it was bi-weekly. I saw that in September, there was one purchase. I think today you guys announced a purchase. We're in October now. But what's going on there? Why the slowdown in terms of the...
we raised 384 million, I think, in July and deployed it as fast as we could. And then after that, you've got some money left over, and then you have basically... you have to grow inorganically through different maneuverings. Like you can, go and raise Bitcoins from OGs, or you can get a direct offering and negotiate with some investor to come and do essentially like a second pipe. Or you monetize the existing business, which is obviously something that George is working on every day because they do have valuable IP. Yeah, because that's completely non-dilutive to existing shareholders. And, they have two successful business lines with lots of international corporate customers, and they have a lot of IP, and historically that's what they've monetized. So he's working on, are they going to sell off pieces of the business to other companies in their space, in the semiconductor IoT space, or are they going to sell off some of their IP? They sold, I can't remember if it was either 200 or 400 million. They sold a bunch of patents to Qualcomm last year for hundreds of millions of dollars.
Yes, that was a big transaction that brought in a lot of cash, allowed you guys to buy Bitcoin very quickly. But some early retail investors, were blindsided by that, maybe didn't really understand the deal. the stock ran up like crazy, and has subsequently fallen since then.
I can just describe what I saw happen. So I think the pipe crossed at $1.40. So that's first. Is that so? The investors, they put 195 million into that pipe to go buy Bitcoin. They bought it at $1.40 a share. When their shares unlocked, a month and a half later, their shares on the day their shares unlocked, the opening price was $1.43. So the round trip to 4x NAV and back, it went from like $1.43 to like $5 and then back down. Had no participation from pipe investors. That was actually just retail, like driving it up and driving it down. And then you have to remember, as it went up to like 4x NAV, the MNAVs for all the other companies in the space were a lot higher than that. You still had, Metaplanet at, I don't know, like 8 or 10 or something like that. Naka was, 20x MNAV or something like that. So it just it didn't really register that much. And it was a really quick round trip. So it sucks. And I don't think that, it's probably still I think I just penned something else, but for like months I've had a pinned tweet that basically said, unless you're a sophisticated investor, at least 80% of your portfolio, that's like your Bitcoin portfolio allocation, and this is for high net worth people, should just be 1x long real Bitcoin. Like, you shouldn't be betting the farm on stocks of any kind, let alone something that you don't understand. And like, if you don't read the statements and don't understand the statements and like don't know the dynamics of what's going on, like this is risky shit. So that's, I guess, kind of what happened over the launch there. The pipe guys that didn't sell are underwater, and they're holding because they know that if Sequans sold their Bitcoin stack today, like literally if they sold their stack today, they would pay off the convert, because there was $185 million, 189, so $189 million convertible note that went along with that. So they'd pay off the convert, and the Bitcoin net of that would be $16 a share. So, that's kind of the math. None of these guys are like rushing to sell. They're waiting to see what happens, because if the price goes up, they know they can always just kind of wait for Sequans to exit the Bitcoin position if they choose to. So there's not a lot of logic for the stock to trade where it is when they have monetization options for the business. And they can also, if they wanted to just unwind the whole thing, then it would be like $15-16 a share.